Hello everyone, welcome to the 29th of September weekly market updates on Technical Insights. This Monday morning, Asian markets started trading positively except for Japan. The Nikkei 225 index in the morning slipped for its second consecutive days, retreating from record high reached last week as numerous stocks went ex-dividend. The Japanese index was down by about 0.8% in early trading. In a closely watched market debut of Sony Financials, whose shares jumped by about 40% after spinning off from Sony Group. China Broad Index, the CSI 300, was also up by about 0.4%, while Hong Kong Hang Seng Index was up by 1.4%, ahead of the Chinese week-long Golden Week holiday, which will begin on the 1st of October this Wednesday. Over in the US last week, all three major US indices finished the week on a positive note, ending a 3-day losing streak. The Dow on Friday advanced 299 points or 0.65% to close at 46,247 points. The S&P 500 added 39 points or 0.59% to 6,643 points. The Nasdaq Composite rose 99 points or 0.44% to end the week at 22,484 points. On Friday, the PCE Price Index, which is Fed Preferred Inflation Gauge, showed that core inflation ran at 2.9%, and the All-Item Index showed an annual rate of 2.7%, as well as a monthly gain of 0.3%. Both these numbers are in line with economists' expectations, and market is still continuing to price in 2 quarter-point rate cuts at the Fed upcoming meetings for the rest of the year. For the trading week, all three major US indices were down. The Dow slipped by 0.2% for the first negative week in 3, while the S&P 500 dropped 0.3% for the first weekly loss in 4. The Nasdaq Composite Index lost 0.7% and was the worst weekly performer among the 3 US indices as investors questioned the sustainability of the AI infrastructure rally that saw Oracle fell more than 8% for the week. Investors are now closely watching the September non-farm payroll report, which will be due this Friday. Analyst consensus is looking at 39,000 jobs, not too hot to turn policymakers hawkish, but also not too cold to indicate any major slowdown in the US economy. Back to Singapore, our STI index ended the final week of September down by 36 points or 0.85% for a second consecutive losing week, extending previous week losses of 0.96% over here. This morning, the STI index hovered around the 4,270 points level, slightly above the 50 days moving average at 4,263 points and the lower bound of the Bollinger Band at 4,258 points. The confluence of these two levels should provide some technical support for the STI index. The MACD indicator has been negative for the past 2 weeks, indicating downside momentum on the STI is still present. But the downside momentum is seen subsiding on early trade this morning. The RSI indicator, now at 46, is also slightly below the 50-point neutral mark, signaling that momentum is weak on the STI. If the STI were to cross above the 50-point neutral mark, the STI index could see a rebound above the 50 days moving average around the 4,260-point level. This morning, we also saw YangZiJiang Shipbuilding reported that they terminated US $180 million worth of contracts with an unknown party due to alleged circumvention of US sanctions. The deal concerning 4 50,000 deadweight tonnage medium-range oil tankers scheduled for delivery from 2026 to 2027. At the same time, YangZiJiang Shipbuilding also announced that they secured another shipbuilding contract for 8 vessels with an aggregate contract of US $440 million. These new contracts comprises of 4 20-foot equivalent units, container ships, and 4 units of 71,000 deadweight tonnage. Year to date, YangZiJiang Shipbuilding has secured a total of 44 effective shipbuilding contracts with an aggregated value of US $1.9 billion. So for this week's technical analysis, let's take a look at YangZiJiang Shipbuilding. This Monday morning, YangZiJiang Shipbuilding share price fell by 20 cents or around 6% to $3.08 at the midday break after news of the US $180 million contract cancellation. The previous time we covered YangZiJiang Shipbuilding was on the 1st of September video over here. In that analysis, we noted that YangZiJiang share price has broken above the upper bound of the Bollinger Band and warned investors against chasing the rally. We noted then that the first technical support level comes in at the 20 days moving average, which is the green line that you'll see here, at then $2.87. The low bound of the Bollinger Band at $2.66 then will provide further support for YangZiJiang share price. The RSI indicator then was around the 77 points level, which was above the 70-point overbought level, indicating that the share price was overbought and investors should wait for a technical pullback before entering into YangZiJiang Shipbuilding again. This morning, YangZiJiang Shipbuilding share price dropped 6% and have pushed it below the 20 days moving average now at $3.19, with the 50 days moving average in blue now at $2.93. The current low bound of the Bollinger Band is now at $3.02, will also provide further support for YangZiJiang share price. Looking at the technical indicators, the MACD indicator has turned negative today, indicating likely more downward pressure, at least in the next few trading sessions. The RSI, now at around the 50-point level, is also showing very weak support momentum, signaling that momentum might be weak in the near term. So for investors looking at YangZiJiang Shipbuilding, we reiterate the support level of $2.87 identified on the 1st of September video, as YangZiJiang share price is now expected to consolidate around the $3 level, and investors should accumulate YangZiJiang Shipbuilding share price just slightly below the $3 handle. Even with today's negative news, YangZiJiang Shipbuilding profit margin still looks very solid, with most analysts saying that its margins are now likely to expand steadily in 2025 onwards, driven mainly by gradual execution of more profitable orders, aided by a potential pickup in new building of dry bulk carriers and tankers. HSBC also raised the stock target price last week to $3.80 from $3.30, with a higher multiple driven by a company's improving earnings visibility and also retains its buyer rating. And these are the updates that we have this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.